morning and welcome as we begin a 5-day business journey here on Business Morning, coming to you live on Channels Television. I'm Ini John Mekwa. Let's start this journey with what's going on in the global oil space. Prices extended gains today, propped up by a weaker dollar and tight supplies that offset concerns about recession and the prospect of widespread COVID-19 lockdowns in China, again reducing fuel demand. Brent crude futures for September settlement rose 69 cents to $101.85 a barrel, while U.S. West Texas Intermediate crude futures for August delivery edged up 27 cents to $97.86 a barrel, and that's after it climbed almost 2% in the previous session. Last week, Brent and WTI posted their biggest weekly drops in about a month on fears of recession that will hit oil demand. However, oil supplies remain tight, supporting prices. As expected, U.S. President Joe Biden's trip to Saudi Arabia failed to yield any pledge from the top OPEC producer to boost oil supplies. Back here in Nigeria, inflation is still a huge source of worry as it hit 5-year high in June, rising by 89 basis points to 18.6% and went from 17.71%. On a month-on-month basis, the headline inflation rate increased to 1.82% in June 2022, and this is 0.03% higher than the rate recorded in May 2022. In the month of June 2022, the urban inflation rate increased to 19.09% year-on-year. This indicates a 0.74% increase compared to 18.35% recorded in June last year. Now, on a month-on-month basis, the urban inflation rate rose by almost 2%, 1.82% to be precise, in June, and this indicates a 0.01% increase compared to May 2022. The corresponding 12-month average percentage change for urban index is 17.09% this year. And I believe that will top the conversation at the ongoing MPC meeting, which starts today and, of course, will be concluded tomorrow. We'll be bringing you the live broadcast of that here on Channels Television tomorrow, so do stay tuned. But now, away from that, Coleman Cables and Wires have concluded and commissioned its fiber optic cable factory at Agric in Ogun State. According to the managing director, Mr. George Onofokan, the drive is to domesticate fiber optic manufacture in the country, and particularly to provide jobs for thousands of people.
Strengthening in-country manufacturing capacity is important. For Coleman Technical Industries Limited, it's the game changer, so the company takes a big leap to become the first company in Nigeria and West Africa to manufacture fiber optic cables, which is meant to serve telecommunication, oil and gas, and other sectors in the country. Many dignitaries, including the governor of Ogun State, are present to witness the epoch-making occasion.
We've been able to achieve first in a lot of things. First for TV cable, first for Cat 5, first for Cat 6, first for high voltage, first for fiber. We'll continue to do a lot of first and break the barriers. We'll be breaking ground on 3 times the size of this project in Ogun State in the next 2-3 weeks. And that is 3 times the project size, and that will take our product spend over $100 million.
Coleman has not taken this journey alone. It found a partner in renowned Corning Incorporated, an American company with almost 170 years of expertise in technologies, including optical communications.
The pandemic has accelerated demand for people to work from home, remote learning, and e-commerce, as well as streaming of high-quality video content. So the opening of this factory couldn't come at a better time. And Corning are delighted to have been chosen by Coleman as their supplier of optical fiber.
The Ogun State governor is elated that industries which call the state home are pushing the envelope of development.
As of December 2021, the investment of Coleman in Nigeria was over $100 million, and it continues to grow. Today, that same factory will be the first producer of fiber optic cables in Nigeria and West Africa, and the 5th in the whole of Africa. Congratulations. They are all results of our deliberate, strategic, and methodical approach to governance.
When the speech is over, The new fiber optic cable factory is commissioned by the state governor.
Commission this to the glory of God and the use of our citizens.
Coleman Technical Industries Limited says it hopes to build a phase 2 of its factory in about a year, which will push its output to 8 million fiber count kilometers a year.
This is what is called the optic fiber cable.
All right, let's see what's happening in the electricity sector. Latest development with electricity distribution companies, we call them DISCOs, indicates that at least 5 firms, Abuja, Benin, Ibadan, Kaduna, and Kano, may now be in the control of banks they took credit from after they were unable to break even 8 years after they were licensed. Also in the picture, we have the Bureau of Public Enterprises, we have the Nigerian Electricity Regulatory Commission, those are the regulators, and of course the handlers of the 11 utility companies. Well, we have someone who would help us understand what's really going on, the nitty-gritty would say, Mr. George Etomi. He's a director at Eco Electricity Distribution Company, joining us this morning. Good morning, Mr. Etomi. Good to have you.
Good morning, Ine. How are you today?
Great, great. Thank you so much for being part of the show. So, a couple of weeks now, I think it's about 2 weeks now, we had the bank and DISCOs issue. Please help us to understand this issue with acquisition process that birthed the DISCOs, and some people have said it's not transparent. That's why we're having the scenario we have now. Help us to understand the details of it.
Okay, just by way of correction, I'm no longer on the board of Eco DISCO, but I'm the chairman of West Bank Gas, and that's the company that has a majority interest in Eco DISCO. Now, this whole scenario hangs around the acquisition finance taken by most of these companies to purchase these utilities. And at the time of purchase, the dollar was trading at 190 to 1. And today, as we all know, it's in the region of 600. So even though there's been some modest tariff increase since acquisition, the difference has not been enough to offset the differential between the dollar and the naira rates at the point of acquisition. So most DISCOs are actually playing catch up with this acquisition finance. There were reset talks that have been going on for close to a year plus now under the auspices of the central bank. And this particular issue was raised by most of the DISCOs who found themselves in a quagmire regarding how the differential in the naira rates between when they acquired the DISCO and what they have to do now to pay back. And there was request that the CBN should prevail on the banks to refinance these loans and redenominate them as naira facilities. Well, the banks on their part, the CBN did actually appeal to the bank, but the banks on their part are saying, if you want that to happen, then you provide us with the dollars. So they were caught as it were in no man's land. And today, in fact, all the DISCO collections are actually escrowed, and there is a waterfall which sees the DISCO earnings, their OPEX, at the bottom of the waterfall. So after VAT is paid, central bank loans are paid, the market is paid, the bank loans are paid, it is only then that the DISCOs use whatever is left to keep the operations. And this has become very challenging for many DISCOs, especially with recent events. Post-COVID has been a major challenge. Even though there has been tariff increase, it caused a tariff shock amongst many consumers. Of course, there's the related issue of energy theft. So as we speak, it's a real quagmire. So what the banks have essentially done is to move, because naturally they are worried that if something is not done, they might not be able to recover their loan. So this is the primary reason why they've made this move. Now, it speaks to the overall issue of liquidity in the sector, which is the main is the elephant in the room. It has always been from the inception. And that is because upon inception, it was designed that market forces will deal with the tariffs. But we've not seen that happen. Tariff increases have come principally as a result of the federal government's inability, as it were, to meet with a shortfall in the market. And we've had all manner of interventions which have not actually gotten to the bottom of the matter. And the issue then becomes, what do you then do? Even if these discos are reacquired, you need to sell them to somebody else. And I'm not saying this is going to be an easy process, because there are already legal challenges mounted by the discos that are affected. But even if you manage to find new buyers, they will be faced with the same problem. The only way the sector gets fed is through collections. And today there is a huge mismatch between what is collected and what can go down to feed the entire sector. And don't forget, the ability of many discos to perform rests mainly on the supply end, where with the thermal plants, gas is the feedstock. And today we all know what's happening with gas. Because gas itself has pricing issues, the contract between the gas producers and the generating companies, GenCos, is done on the best endeavor basis, which essentially means that it is only when the gas producers can supply gas that they will give to the GenCos. Otherwise, they will take their gas and sell at market price and get proper earnings for all their efforts. And that supply uncertainty is what is leading to a lot of the blackouts we're having, because the GenCos are unable to generate. Transmission is therefore also unable to transmit, and it goes back and forth. I'm sure you recall that the generating companies were complaining that they owed a lot of money, many of which the NBET disagrees with. But whatever the case is, you will see that from the supply end to the retail end, there is this paucity of funding. And it's not really, people erroneously think that it's the fault of the discos. The discos can only give power when they have the power, and it makes absolutely no sense for a disco to have power and not give it, when that's the only way you make money.
Yeah.
So the supply disruption is the major issue.
Yes,
going forward, we need to deal with it.
I guess, Mr. Itomi, because the consumer knows the disco is the face of electricity in Nigeria. So whatever grudge, whatever anger goes to the disco first, before all of the explanation. I would like for us to talk about the possibility of restructuring, of this finance with the banks. But before we go there, I'd like for you to react to some notion, there's some conversation that perhaps the initial privatization process was not transparent enough, and the people who should have gotten it are not the people who got it. That has also contributed to what we see now. How do you react to that?
First of all, that's totally untrue. That initial process was even hailed by the World Bank. And by the way, the discos were not just giving the discos, they paid good money for it, top dollars to acquire those discos. Negotiations took on very, very long. What you might say is that, how come there were no foreign takers? And that's principally because the BP had gone on a roadshow long before they turned inward to look at Nigerians to acquire those assets. And the major reason why they didn't have takers for those utilities were these distortions that I'm talking about. Many investors did not have a clear sight as to how they will recover their investments, given the distortion on the tariff. So this is really what happened. So to turn around and vilify Nigerians who took a leap of faith to invest in their country, I think is most unfair. They too are victims of the macroeconomic circumstances in which we find ourselves in this country. There's not much they can do about the exchange rate. Absolutely nothing they can do about the exchange rate. Nothing you can do about the gas supply. And what's just going to happen? The bids were competitive. The parameters were there. You couldn't even be pre-qualified if you didn't have a technical partner. So all those things were there, and that's not really the problem. The problem is that once you do not have a supply guarantee, there's absolutely nothing we can do. And talking about what nothing we can do, to be able to collect money, you have to invest heavily in your utility. And the problem with many discos is that if they were going to make such huge investments and the tariffs were not going to be adjusted, it meant that it would have been forced to subsidize the sector. And no investor invests to subsidize. And that's where we've had a problem. What's going on now is that between COVID and collapse in oil prices at that time, the federal government was just forced to look at this subsidy regime again. The discos always complained that the subsidy was not properly being utilized. And that is why we have a problem. There is no member of the value chain that is not complaining. You have gas producers are complaining, Gencos are complaining, transmission is still 100% government, and that's a problem in itself because the processes by which they run are what they are. They just simply don't meet with private sector standards. And then you have the retail end, which is the distribution companies also complaining. So nobody in the value chain is happy. So, and I've always said that this blame game isn't going to take any one of us anywhere.
All right, Mr. Itomi.
This country.
Okay, so what about the issue of restructuring? Has that been explored also? Restructuring the loans?
Clearly, like I said, that.
All right, looks like we have a little bit of network hitch with Mr. Itomi there. To be interesting to get his view on the efforts to restructure those loans and, of course, the difference that this will make. And then it's also interesting because in the ongoing constitution amendment, the power sector has also gotten attention, you know, where states may be allowed to provide a power for themselves, you know, and it's not all going into the national grid before it now gets supplied. I think that is also something that is being given attention with the constitution review. And hopefully that will bring a fresh breath into the power sector and maybe increase the supply that we do have in the country. And needless to say, power supply affects manufacturing production. And imagine if we had power and then a lot of manufacturing companies do not have to depend on diesel and petrol, then the queues and the pressure on importing more subsidized petrol or unsubsidized diesel, which is hitting 850 naira, would reduce, and that might even help, you know, the manufacturing, non-oil exports, and even, you know, the inflation that we are all crying about, which is now past 18%. I think we have Mr. Itomi back. Hello, Mr. Itomi, can you hear me?
Yes, I can. Hope you can hear me too.
Yes, I can hear you. So, I mean, just briefly now, the issue of restructuring, has that been explored also?
Yes, as I mentioned to you, in the reset talks that have been going on in the industry, most discos have actually requested for these loans to be restructured because it's a big problem trying to play catch up between the exchange rate differentials. Discos don't have access to central bank rates to the dollar. So they have to look for dollars to meet with all their equipment requirements from the parallel market. And that's a huge concern. The CBN, in fairness, has prevailed on the banks, and I'm hoping as part of resolution of this problem, the banks can look at this. Eco-disco, some discos like Eco-disco, who foresaw the handwriting on the wall, did actually go and restructure their loans. By the time these money started moving from 190 to about 250, 300, the Eco-disco board decided they needed to restructure. So they restructured, and which is the reason they are somewhat insulated from the current shock that is going on. Yes, to be direct with the answer, restructuring would help. These loans should be restructured, made more long-term, and then perhaps giving single-digit interest rates. That's the way you can encourage investment in the sector. We should encourage Nigerians who want to invest in their economy.
Yeah, we certainly have a whole lot to discuss because the role of NERC, the role of the BPE are also important in this, but we're just out of time. But I would like for you to please comment on what you think about the ongoing attempt to kind of give more power to the state government to produce more electricity and supply, you know, and not have to go through, I'm sure you know about the constitutional amendment and what it could do to the power sector. How do you see that coming through, and what difference do you see it making?
Well, you know, the problem with the current power configuration in Nigeria is that it's over-centralized, especially with the national grid under the firm control of the federal government. And often to balance the grid, power is supplied to the various component parts of Nigeria without recourse to the economic value in doing so. So you find that at times, areas where you require power and can get revenue, you don't give them power, because if you do so to the detriment of other areas, it could destabilize the grid. So everybody is made to ramp down, which makes very little sense. So one of the solutions naturally is to find out how we can decentralize the grid, which is the reason for the constitutional amendment. This way it is hoped that states who have the ability can begin to control the source of supply as well as the distribution. Of course, we'll work out some of the fine contractual issues that will be involved regarding the current arrangements. But going forward, it will be a worthy way to see if it will be done. The National Assembly has passed it. We're hoping that there will be concurrence from 2/3 of the various houses of assembly before, and then it goes for assent of the president before it can take effect. But yes, that should disaggregate the power sector, and then states that can afford it can begin to look at more practical ways of giving themselves power. The federal government itself should be relieved from the burden because it's carrying on so much, and there's really so much they can do with dwindling resources and all the global trends towards renewables. The federal government, that behemoth, can't just do the work. It must be broken down to component parts.
All right. Thank you so much, Mr. George Etobi, former director with Ecodisco. Thank you for sharing your thoughts with us. We still do have a whole lot to touch on, but unfortunately, the time is up. Thank you for being part of the show. Enjoy the rest of your day.
Thank you.
Well, when you talk about electricity supply in Nigeria, there are always so many angles to it that you can hardly exhaust it in one segment of a conversation. But we'll continue to stay on the matter. For now, we'll take a break. When we come back, food security, agricultural insurance will be our focus. This is Business Morning on Channels Television. Welcome back. You're still watching Business Morning on Channels Television while waiting to get that conversation on agricultural insurance, clearing some of the areas that you might have been asking questions about. We'll head to the market. Good enough, the equities recovered last week. Friday, in fact, on Friday, the market closed more than 1% higher. Investors smiling home for the weekend. We hope that that trend continues. But I mean, you know, once the all-share index is up that much, then you see profit taking and then it goes back. It's just a cycle that we see in the market. Investors make money, buy the dip, and make money again, buy the dip, you know. But we have Anete Edet now joining us back from leave. Anete, good to see you after your vacation. I hope you are more refreshed now and strong enough to give us details of the market.
Yeah, thank you, Ini. I had a blast during my vacation.
Awesome.
And yeah, I must say it's good to be back to do what I love to do most, which is to review the markets. And of course, we have 4 markets at this instance. So let's get started with it. And first, we start with the Forex market. It was a negative picture across board for Forex trading at the FMDQ exchange as at last week, July the 15th. across, when you take a look at the board here, total value of transactions was down by 61.25%. That's a cumulative of the FX spots, the forwards, the futures, and the FX derivatives market. There you can see all minuses, and this shows you that the volume turnover wasn't that impressive. It's not impressive at all. That's the second time within this week. So now we're into the third week of July, and we're hoping that maybe there's going to be a reprieve for what we saw, this downturn that we saw in terms of the Forex market transaction turnover, 61.25%. Then the highest of the decline there that we had was on the Forex market. But let's flip over to the Naira exchange rate. The Naira exchange rate got a little bit of a reprieve, or quite a moderate reprieve at 0.14%. From the previous 424 Naira 45 kobo to 423 Naira 85 kobo, and this is as at last week. So now I think we can move from that market to the fixed income market. The fixed income market, starting with the bonds market. The bonds market, it was bearish due to demand, weakened demand, and this followed investors' positioning ahead of this week's bond auction. So consequently, there was the average yield expanded by 19 basis points to close at about 11.5%. But when you take a look at the board here, the number of deals carried out on that space was 12. The highest number was on the 21st of January 2042 paper, followed by the 27th of April 2032 paper. So now also at the Treasury bills market, it was also bearish. As at Friday, the close of Friday's trading session, this was the only instrument that was the only paper that was traded on the Treasury bills market. The total number of deals there carried out was just 1. And of course, when you talk about that market, participants sold off instruments of both to generate funds, and of course there was tepid liquidity in that market. Across the segment, the average yield increased by 105 basis points and 9 basis points to 7.4% and 6.9%. Now let's take a look at the Nigerian equities market. 472 billion naira was a single-day gain that was recorded on the market, and this comes after the third trading day. That's after investors had returned from the Muslim Eid holiday. Remember, Monday and Tuesday were public holidays, but investors resumed midweek trading session and then Thursday's trading session. But I think, Ini, I'll give you more information right after this time.
Yeah, sure, of course, and I can see how excited you were that I mean, just a single trading day, and then investors had that much. But I'm just wondering how much got into your bank account. You're just happy.
Yeah. I'm hopeful.
All right, Adeosi, thank you so much for the market analysis. We'll of course have another segment tomorrow. Now let's move over to that conversation about agricultural insurance. We did have this conversation a couple of weeks ago, and well, as the world strives to have a food security in the midst of the war, in the midst of high inflation and what we see globally, it's safe to talk about agricultural insurance. And in Nigeria, for instance, we have farmers facing a whole lot of insecurity, a lack of fertilizer, or at least expensive pesticide and all that. But let's have Mr. Ayola Fatono joining us from our Abuja studio, Associate Director, Head Regional Technical Services, Agric and Micro Scheme Specialist with Leadway Assurance Company Limited, joining us. Mr. Fatono, good morning. Thank you so much for joining us.
Thank you, Ine. Good morning. How is Lagos?
Lagos is fine, thank you so much. So we actually talked about this, but I mean, you are into insurance. The other time we had this conversation, we had it with a farmer. How popular or not is agricultural insurance in Nigeria generally?
Yes, thank you, Ine, for that question. I think it's actually gaining ground now. It's gradually becoming very popular among stakeholders across the agricultural value chain. Why is that so? Because you have a lot of investment coming in, and the federal government economic diversification program is hinged on agriculture. And agriculture being the type of venture that is faced with a myriad of risks, various kind of, especially where you are dealing with the upstream value chain component of it, where farmers engage in a lot of production activities. There is a need for them to find a financial instrument to hedge against those risks when they do occur. So, and by and large, they are beginning to see the fact that this particular financial instrument is actually very, very necessary for them to be able to break even and even make profit concerning their agricultural activities. These risks, of course, when they do occur, actually causes a lot of losses on their own part. And for these particular investors too, for instance, if a financial institution or any bank wants to put money in any agricultural venture now, they will request that that particular investor will have some semblance of insurance to cover that particular risk when they do occur. So it's actually gaining popularity. In 2010, you have less than 500,000 farmers having some semblance of insurance for their various kind of agri ventures. But right now, as at 2021, you have almost 3 million farmers have some semblance of insurance on their various kind of ventures. So that is actually gaining a lot of popularity because of the fact that the stakeholders are passing more interest in agriculture. You have, of course, 70% of the Nigerian population are actually involved in one form of agricultural activity or the other. So it's actually gaining popularity, especially equally with the advent of climate change and global warming, which actually affects agricultural production. So there's a lot of interest, and it's gradually, it could be better, but actually, it's actually far better than it was 10, 15 years ago.
All right, Mr. Fatuna, I guess another way to make it gain popularity even more would be if you guys in the insurance sector will make it more friendly and easier for farmers to claim, you know, whenever there's been a disruption to their work. Because sometimes you don't check, for instance, the plot of land. I was told you don't measure it, you take what the farmer tells you, and yet once there's a mishap, then you now go and check it, and that causes a huddle when a farmer wants to lay claims. So how smooth is the process for farmers? When they really need you, do you come through for them?
Yes, thank you for that particular question. We actually come through for them. Because, like we said, Agric itself is an activity that is time-bound. If a claim occurs, the farmer needs to get his compensation as fast as possible to be able to get back to the farm and actually continue doing what is expected to do, thereby guaranteeing the full security of the nation. And these days, as is done with every other business venture, you have a lot of technology playing a lot of role. So on our part as an insurance company too, a lot of technology is actually being adopted to the way claims are actually being paid in order to make it faster. Right now, we use a lot of satellite imagery, remote sensing to be able to determine the extent of loss. They've only to determine crop health to see whether they are doing very, very well in order to ensure that this claim process is smooth and is as fast as possible. So technology is actually playing a major role to ensure that we give those farmers those service delivery that they need in order to ensure that they continue to do what they are expected to do on the farm, so that they will continue to equally feed us, because it's actually very important. The farmer out there is actually very, very important. So for us in the sector that are actually giving this particular service, we take cognizance of that to ensure that the farmers get their payout as fast as possible.
Then what about, you know, with the peculiarity in Nigeria, for instance, the issue of insecurity has disrupted food production, and maybe not directly, but sometimes even farmers are scared of going to farms because of the threat of insecurity. Do you have packages tailor-made to suit, you know, things like that are peculiar to Nigeria?
Thank you. You see, for Agric insurance products and services, it's actually meant to cover risks that are actually not man-made, that are beyond the control of the farmer, that have to do mostly with natural occurrences. But be that as it may, nothing is insurance in sacrosanct. you have to take a look at that particular risk that is peculiar to that particular farmer or that agric investor to be able to develop bespoke solutions that will speak to that particular need. So presently, the industry is actually taking a look at the possibility of providing that kind of cover for that had to do with security. But presently, as it were, there is no policy on ground that will actually take care of that. But what we are trying to say is that we are not unmindful of the existing situation. And we are talking to our partners to see what we can do concerning providing that particular kind of service. But for pandemics, we actually have cover, especially for people that are in the livestock sector. We actually have cover for pandemics like avian influenza, for people that are into poultry production, and pandemics for virus disease of African swine fever for people that are actually in the piggery in piggery production. So for pandemics, we have various kinds of policies that are actually take care of those pandemics when they occur. But for security, it's an ongoing conversation with all the stakeholders in the industry to see what the insurance industry can be able to do to provide that cover for farmers. Thank you.
Yeah, I guess it's time to look at it because, I mean, insecurity is becoming a big threat to food production in the country. So I guess that would also make the farmers look more to insurance and say, oh, this is a useful policy that I could inculcate into my costs of operations and all that. But please tell us, is it true that between the government and the private insurance companies that smallholder farmers or smaller farmers gravitate towards the government more, and then you have the big farmers going to the private sector? Is this a true picture in your sector?
No, absolutely not, Ini. Absolutely not. On our books, I think we have over 1 million farmers. And most of those farmers are actually farmers that are smallholder farmers that do subsistence farming. So on our books, we have both commercial and smallholder farmers. In fact, the smallholder farmers are they are very, very important because they form a greater percentage of the individuals that provide food for us in this nation. So I don't think that is actually, I think it's more of a fallacy. It's actually not true because we have a compendium of all the smallholder farmers and the commercial farmers on the books of the private insurance companies. And I will equally make bold to say that you have more of the smallholder farmers because the smallholder farmers constitute a greater percentage of the farming population, constituting the customers of the private sector insurance companies. So it's actually a compendium of both, but with more of the smallholder farmers participating than the commercial farmers.
But we learned that the premium for the government insurance company is cheaper than that of the private. So why would it be that way?
You see, again, that is another issue that is giving us some form of concern. You see, agric insurance in Nigeria, from my experience, is actually the cheapest in the country. I mean, it's the cheapest in Africa, even in the world. Agric insurance in Nigeria is cheapest. It's the cheapest in Africa and equally in the world. Why? Because the risks that are insured occur more frequently. And when the frequency of occurrence of a risk is actually closer than 1, that means you are almost insuring certainty. So the price of that particular risk is actually supposed to grow up if insurance companies are willing to onboard that particular risk for cover. But by and large, why it is actually cheaper on the government side is that there is a premium subsidy that the government actually provides for farmers that come to pick up insurance from the government side. And we're actually advocating that farmers in Nigeria are farmers in Nigeria, whether they are insuring using the government-owned agric insurance company or they are doing so along the private sector insurance companies. The subsidy should actually be all-encompassing. It should be for all farmers. It should not be for farmers who are actually gravitating towards picking up those policies from the federal government insurance company. So it's actually be encompassing. So that is why in most cases you find that these smallholder farmers would likely want to pick up policies from the private sector-driven insurance company. But again, from experience, all those are actually beginning to change now because, like I said, the exposure, the risk exposure in the agric business industry is actually going into multiples. So participants in that particular sector are always looking for options for them to be able to get that particular service that they actually needed.
Right.
So we're actually advocating that that particular subsidy should cut across all the insurance companies that are providing these agricultural insurance services to every farmer or agri-investor in the country. Thank you.
All right, Mr. Ayola Fatono, head Agric and Micro Scheme Specialist with Leadway Assurance Company Limited. Thank you so much for sharing your thoughts with us. And we do know that, well, agricultural insurance in Nigeria is a developing one, and we do hope to be able to convince even more farmers to embrace the policy. But I guess it's also two ways, because the insurance companies would also have to live up to expectation and come up when it's time to pay that compensation, which is the reason the farmers got into the business in the first place. And it's all towards ensuring that we do have food security in Nigeria and the world. So let's go to London now. We have Juliana joining us from our London studio. Good morning, Juliana. Thank God it's Monday, not just Friday. Good to have you, Juliana.
It's nice to see you, Innie. Yes, thank God it's Monday.
Yeah, thank God it's Monday, but I don't know if it's that good for you guys because you have extreme weather coming up or if it's already there. And unions are asking for maximum workplace temperature. And this is, of course, in the midst of surging energy prices. I don't know how you guys will cope.
Yes, well, Britain is bracing for extreme heat over the next 2 days, today and tomorrow. And it is something that, health officials are taking incredibly seriously, especially our viewers watching in the UK. If you have elderly loved ones or very small children, it is very imperative that you adhere to the advice. And that's because we know this country isn't set up for extreme heat. We're expecting nationwide shutdowns. Some schools have shut down. We're expecting there to be severe disruption on rail and travel networks. Now, what we're being told by meteorologists is that we could exceed 40 degrees Celsius today. The highest temperature that's ever been recorded in the UK was, I believe, in 2019 or 38.7 degrees. It's probably about 30 degrees right now, and that's why a national emergency has been declared. This is the first time ever that we've received this red level alert warning, and people are being asked to stay at home. Do not travel if you don't need to. And I do plead, particularly to our communities, young mothers. You do see them sometimes with their children, you know, wrapped upon wrapped of clothing, lots of hats. Just don't do it today. If you're still worried about the weather, just don't go out. That is the warning that you must adhere to. And also make sure you're drinking plenty of water. Unfortunately, we are hearing from the NHS that thousands of people will die over the next couple of days because of heat stroke. And they are saying, even if you do believe you are a fit and healthy person, just adhere to the government warnings. If you don't need to travel, stay at home. And if you are traveling, make sure you drink plenty of water and don't overexert yourself. So I'm going to be a lot slower than I usually am when I'm talking to you, Innie.
Yeah, we'll understand when we see that, Juliana. I mean, you just sounded like a doctor there, but we'll get more from you during Business Incorporated. I do stay safe and drink plenty of water, Juliana.
Absolutely, I will. Thank you, Innie.
All right, so let's see. Vlad is drinking a lot of water back here. I mean, I think back here we're just used to the heat. We know how to, we know how to deal with it. You know, we're used to it. You know, I think it's part of us at this time.
Yeah, and also do drink a lot of water, even though we're used to heat in this part of the world. But you said thank God it's Monday. Yes, thank God it's Monday. Thank God it's a green Monday. You know, in the crypto space, we're seeing.
I think you sustained this from Friday.
Green. Yeah, from Friday. Yes, it's
good
quite looking
bullish,
but you know, traders are still cautious. You know, in this market, it could flip anyway. you know, in the coming days. But fear greed index is also looking good at 20 points, even though it's still an extreme fear and the market is showing, you know, sentiment with traders now is improving. We're at about 10 and 11 points for the past few weeks, but now getting to 20 points. Hopefully we'll see extreme greed at some point in this market. Market cap this morning is up 2.39%. Volume traded up 4.28%. And we see Bitcoin dominance there sitting at 41.72%. It's been ranging between the 40% and 43% range. Price of Bitcoin, $21,808, up 2.37%. At this hour, it's trading at about $22,000. We're seeing a lot of bullish movement there with the price of Bitcoin. Also, volume there traded $27.73 billion. And we see Ethereum also kind of outpacing Bitcoin this morning. It's up about 7% at $1,442. Volume traded $18.77 billion. And looking at the top alts per market cap, it's all green. It's a green market today. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume.
Good morning. It's a green Monday.
Yeah, it's green Monday, and it's understandable that you're excited, Rume. How are you seeing this? Can we sustain this momentum this week?
All right, see, this is exactly what is going on in the market right about now. It's, you know, the market actually responds to all of the global sentiment going on. We've seen these rallies moving across riskier assets, not just Bitcoin or cryptocurrency stocks of, we see the stocks of this morning about 6%, the stock of Coinbase actually gone up and some other tech stocks, right? And this is as a result of the fact that, you know, when the price of oil was really high, gas prices were high, and it's actually affecting people that are involved in riskier assets like Bitcoin. But you've seen that last week, the president of the United States actually has gone to see the crown prince of Saudi Arabia, that is Prince Mohammed bin Salman. And the discussion is about how to pump more oil, and this is also very positive for Bitcoin. And we're going to see sustain. What I'm looking at really is you take a critical look at the 200-day moving average. We are actually heading above it gradually, and very soon, I'm very optimistic 30,000 is going to be in sight.
Wow, 30K. Well, it'll be quite interesting to see that level. You know, we've been used to the bear market, you know, in this market. But let's look at another story. Now, we're seeing the Central African Republic, after, you know, approving Bitcoin as legal tender, now they're taking it a step further to add it as a reserve asset. How are you seeing this?
You know, that country is going to be more like our kind of El Salvador, but in this time in Africa, I know it is so important. Previously, they came up with their own tokenized currency for their natural resources. This only shows that this country actually is looking forward to the realities of digital assets, for example, and it is a welcome development. I know some we're already seeing reactions from the IMF and some other banks, even the central bank of some Central African states, you know, are reacting to this. But I think this is a step in the right direction, because the world is headed to this innovative technology, and everyone wants to protect themselves and also make gains. And the best time to come in is this early time. A lot of innovations, and I believe this is actually targeted towards companies that are built around the blockchain space, not just cryptocurrencies now, because they are being represented differently in different parts. For example, the UK has said is they're going to see it as a financial asset, and some other countries. You know, so I think it is positioning themselves very well, and they're going to take all of the opportunities that come with cash flow from these companies that are coming to the country. It's going to
right, and Rume, legacy investors would argue that, you know, adding such a volatile asset, you know, into your reserve currency is quite risky, I must say.
Yes, exactly. There's no doubt. It is quite risky, no doubt. But as we grow further, let's not forget, it is just 13 years and it's gaining momentum. It has done $3 trillion market capitalization. Right. Although it's $1 trillion now. So let's watch this new technology grow. Okay. And it is because a lot of people are actually speculating. They don't understand the underlying value of it. And I think that's because that when we begin to see other technologies, even rolling on the blockchain for like logistics and some of that things, you've seen what NFT has done in a short period of time. It's going to really evolve, and the best is going to come.
All right, Remy, quite interesting time seeing, you know, a Bitcoin as an asset, you know, added to our reserves. Quite interesting. Thank you so much, Remy. Always great to have your perspective.
Thank you very much, Ladi. I can always say that you are early adopters too.
Early adopters. Great. All right, now we look at the top 5 gainers. We see double-digit gains this morning with T-Fuel leading that counter up 20.74%. So it's a really green market we're seeing this morning. It remains to be seen if we can actually hold on, you know, for the week.
Yeah, remains to be seen, and well, we'll just keep our fingers crossed and follow the story and find out how it ends at the end of the week. Thank you so much, Ladi.
Thank you.
So that's it on the program. Thank you so much for being a part of it. It's day 1 of the business journey here on Business Morning. Tomorrow will be day 2, but tomorrow we'll have a little bit of twist to it. Ladi will be here in the morning because the Monetary Policy Committee will be meeting in Lagos, and I'll be there at the CBN headquarters. So you can join us at about 1 o'clock, 1:30. MPC will be telling us the decision and how they are hoping to curb the issue of inflation and some other economic factors that the country is facing, which is what the world is facing also. So see you tomorrow from the MPC, but at 1:30, Ladi will be here for Business Incorporated. I'm Ini John Mekwa.